Alibaba is my bet on the continued growth of the Chinese economy, the breakout of the Chinese middle class, and the expansion of per capita GDP in China. Now, this quarter's results are pretty astounding, and I'm trying to have them sink in, but we have a beat of earnings per share of 20% and a respectable beat of 4% in revenue. This is how much they exceeded the analyst expectations. And when you look at the breakdown of the comparable quarter 2022 versus 2023, revenue is up substantially. All right. But also, operating margin went from 12% to 18%. That to me is potentially the most impressive number in this whole release. That's a 50% increase in operating margin. Now, combined with the revenue increase and the operating margin increase, that creates a sort of 1-2 punch, which has resulted in operating income going up a massive 70%. That's almost difficult to believe, but it is right here in black and white. So I do, in fact, have to be like Naruto and believe it. And, honestly, I could not be happier right now as an Alibaba shareholder. Also, the share repurchase program is still in effect. They have been gradually buying back shares, and it looks like there is still just over $16 billion remaining under the current program, which is authorized by the board, which remains open through March of 2025. So there's still quite a long runway for them to continue to buy back shares. And honestly, even after the stock price went up due to this really impressive earnings report, it's still relatively cheap compared to what they produce in terms of earnings and cash flow. They don't trade at all that premium of a multiple because people are, a little bit leery of investing in Chinese companies. They're afraid of geopolitical risk, regulatory risk from the government there, etc. But I think with China, I think the rewards outweigh the risk. And the CEO credits the continuing execution of their reorganization for unleashing what he calls new energy across their businesses. Now, this reorganization was to do with them basically having each of their separate divisions operate more independently as their own businesses. There's even been talk of them doing, some spin-offs into making some of those divisions into their own publicly traded companies in the future. Now, personally, I like the idea of having them operate more independently and forcing them to, trim the fat on their own, figure out ways to grow value on their own, but not necessarily spinning them off into their own companies. Like, I don't want to own 6 different tickers just to have Alibaba. I just want to keep it kind of like it is. What can I say? I don't love change of that variety. Now, when it comes to the future for Alibaba, analysts expect EPS to grow basically low double digits over the next handful of years. Obviously, this year they expect to be pretty great compared to the last couple of years, but they expect a slightly more moderate growth, but still impressive. I mean, I think double-digit EPS growth with high single-digit to low double-digit revenue growth is pretty solid. And, when it's already not at a too overextended of a valuation, I think that it's definitely, the financial juice is worth the squeeze in a sense. If we look here at the ratios, I mean, we're getting a PE ratio of low to mid 20s currently, but again, EPS is expected to be a lot higher this year than last year. So I think we're going to see that this is actually quite a lot cheaper. I don't see a price to free cash flow here, but I believe, let me see here, the free cash flow, I want to say the free cash flow per share is actually better than the earnings per share in a lot of cases. Let's check this annually just to see like what it's averaged. Yeah, so it looks like usually their free cash flow per share has been higher than their earnings per share. So if you look at them as a multiple of free cash flow, it's actually, potentially looking even better. So yeah, I definitely think that Alibaba is a company that's got a lot of potential. And if you believe that the Chinese economy, per capita GDP, middle class is going to grow, and you were going to choose a single business to, to capture the benefits of that growth, I think you could do a whole heck of a lot worse than Alibaba. I've seen arguments for other companies like Tencent, et cetera, and there may be definitely some validity behind that. It's just I happen to see the most value in Alibaba. It makes the most sense to me. But hey, opinions are a dime a dozen. Speaking of which, go ahead and let me know yours down in the comments. How do you feel about the future of Alibaba? Do you own any shares? Do you stay away from China because you think the risk is too high? Let me know. I'm always interested in hearing other points of view on these kind of things. Also, like and subscribe, help me out with the algorithm, and make sure you join my Discord. Link is in the description. Until next time, I hope that you have a fantastic day and hope to hear from you soon. And cheerio, old chaps.